We had, of course, some of the big mining shares really propping up our market yesterday, shares like BHP Bhiliton and Anglo. So those shares that are really weighing on the market today, so we have the JSE down by close to 1%.
Yes, I think a little bit of profit taking coming into the market. We saw that the Nikkei was at a 5-month high yesterday, and I think money coming off the table there. The American market also initially started very strong yesterday. It was up at 0.7% when the hour market closed. So I think a little bit of profit taking coming in. And then the dollar, very good dollar strength. I think that copper has come down a good few percent off its high, and the big miners that are holding those copper resources are coming down quite a lot. So we see Anglo and Bhiliton coming down quite aggressively today.
Now, although we're seeing these little pullbacks in the market, usually after a few days of strong gains, we're not seeing the aggressive pullback that many had been talking about a couple of months ago, a pullback of around 10 to 15%. Do you think that's still lying ahead, or do you think that it is going to be generally upwards from here?
I think with the quantitative easing that came through, people are worried to sell too much because there's so much liquidity in the market. It just always flows straight back into the equities markets and the emerging markets as well. So I think that the selling comes off, it's more profit taking than that selling out of positions. Although in the last week or two, the economies around the world are looking at a bit under pressure. We see that Ireland looks like it might have to go for extra cash from the UK, and the EU is also under pressure with Greece again. So people are starting to look at the market and seeing that we're not really coming out of this recession as well as we thought we were. So there is a little bit of risk on that side that the markets will pull back. But with the amount of liquidity, a little bit of profit selling first, and no very big pulling of funds out of the equity markets just yet.
Because we do have Eurozone finance ministers meeting this evening, and of course Portugal, Greece, Ireland likely to be top of the agenda. Do you think the market's really just looking for certainty here, for steps to be taken to solve the debt problems in these countries?
I think they've been looking for certainty for a good few months now. I think that the amount of debt that they're holding is very excessive, and even though they're trying their best to curb the amount of spending that these governments do, it's very difficult when there's so much unemployment. So I think that they'll have to probably put a little bit more money into the system that will then once again flow back into emerging markets. We'll steal the rand strengthen again. So on that side, I think it will just increase the liquidity if something comes out of that where they have to put more money into the system.
There's also been speculation building since China released its inflation figures towards the end of last week that we are going to see more monetary tightening in China. You mentioned copper pulling back. We had it very close to $9,000 a ton last week. Do you think it's really just the China sentiment weighing on metals like copper?
Well, I think if you take a look at all the bond yields around the world, they're starting to tick up now finally. So they've broken these long-term trend lines. So yields are going up, and people are expecting a little bit of inflation from that side. The one way to curb that would obviously be if China slows down. And at the moment, they are trying to tighten their monetary policies and their fiscal policies, and putting pressure and trying to slow that growth coming into, especially on a local level, and the amount of the housing, etc. But with such a massive population, it's very difficult for them to curb it for a long period of time. And I think eventually, China will just carry on growing at these levels, and there'll be inflationary pressure going forward.
Of course, over in the US last night, we had one Fed official saying there's going to be a long time before monetary policy starts tightening in that country. And yes, of course, we had manufacturing numbers up, which were pretty negative. Retail sales better than expected, but really propped up by the auto sector.
Yes, I think you've seen very choppy figures coming out. So good retail sales, but then manufacturing numbers came out very poor. And I think the reason why is because of such high unemployment. The consumer saves for a month or two and then manages to go out and buy. You get some good retail sales, but then they can't carry on that momentum, and then they back off a bit. So you've seen quite choppy figures coming out of the States. I think you only get consistent good numbers every single month in both the consumer side and the manufacturing side once the American market starts to employ people and that unemployment number comes down.
In the meantime, would we expect this flow of emerging market money still to prop up markets, or do you think we could see those flows starting to dwindle a little?
It is slowing down slightly, but I think that with very wide yields, South Africa's still got a very wide yield compared to a lot of the other countries. The money will still flow. I think the speed of the money and the velocity of the money coming in has slowed slightly, but it will still carry on coming through until quantitative easing is stopped. So I think if the Eurozone has to put more money into the system, it'll carry on flowing back into emerging markets.
We had BHP Bhiliton up quite strongly yesterday, and that was after it cancelled its potash bid and decided to instead return, I think, just over $4 billion to shareholders. That share a little bit under pressure today. We also had their shareholders meeting in Australia this morning, and the company really still committed to growing the potash operations it has in Canada at the moment. How's the market reading the whole BHP Bhiliton story at this stage?
Well, I think they're looking for growth, so they want BHP to carry on growing. And at the same time, I think they're quite happy that there is a buyback coming through. They haven't been so clear whether they're just doing a buyback and stopping acquisitions or doing both. And I think that's why the market came off a bit today when they said they're still looking for acquisitions. They did say that the buyback's coming, and if they are set to do acquisition, well, then they're going to have funding problems again. So I think the market just stepping back for a little bit, trying to get some more clarity out of Bhiliton. And we see a bit of a sell-off this morning. But I mean, the share's done incredibly well over the last 2 weeks, traded up into the 272, 273 level, and still trading in the 260. So the share's done really good lately, and I think that there'll be a bit of profit taking coming in here, and we're waiting for clarity to see how many more acquisitions BHP Bhiliton will be able to do, or if it's just going to be a buyback scheme.
We have Foschini expected out with results in the next hour or two, and I think the market's looking for growth of about 18% in earnings, which seems pretty good, but still pales by comparison to what Mr. Price came out with yesterday.
Yes, Mr. Price's numbers are very good, and they're obviously importing a lot of their clothes, Mr. Price, on the lower level, with a very, very strong rand, and their margins are increasing quite considerably. So even though the flow of consumers into the stores might be the same or slightly smaller, their profit margin is moving up quite considerably. It'll be interesting to see if on a slightly higher end, if Foschini can do the same. They're obviously importing a lot of their goods as well, but I don't think you'll see that they'll be getting as much margin benefit from the strong rand as Mr. Price has. And quite interesting to see. Truworth's numbers were very good, and I think Foschini will battle to keep up with the two of them.
Of course, Mr. Price, share price is 64 rand, and that takes his gains over 12 months to about 92%. So pretty good going. Do you think there's any room left in share prices like that?
With the strong rand and retailers importing so much, I think their margins will stay strong for quite a long time, and I think they'll outperform the market for far longer than people expect. So I do think that there could be a little bit more upside, but you are at the top of the range.